Hi everyone, and thanks for checking out my channel. I'm going to cover natural gas since we are potentially in a setup that's very critical, as I believe the October contract could be under serious selling pressure next week. And that of course I'm gonna try, of course, not to lose money on it, but more trying to make something out of it. So very interesting, I think. Good time, I think, to go through it and prepare for some plan moving forward. Just having a look at the price action we got last week. Significant sell-off on Thursday. We lost near 10%, I believe. I think even the front month contract lost even more, and then we saw some bounce back, mostly technical on Friday, following a week that's been relatively flat before. Looking quickly at the quote report, we can see that the previous week we got open interest increasing, but very important, we got the managed money still increasing long position, and even some other reportables also increasing longs, and we've seen the swap dealers continuing to edge against long position. So the only traders on the right side here were the retail traders. They were loading short position and reducing their long, so quite a smart move, not from the dumb money, but not so smart from the smart money, which is a little bit concerning. Reason is that they are actually not taking that kind of flat price action to unload their near-term contract and trying to secure in case we getting some major issues because of the Contango. So if we move here, I got the first point, so the Thursday sell-off and the Friday flat price action. What it means is, in my opinion, very important. Firstly, we were in that channel and we broke it without even stopping at that level. That's quite a concern. Would have expecting some buying pressure to show and potentially some bounce back and continuing lower, but not such a sharp drop. So to me, this is a bit panic selling, and what is even more concerning is that we did actually drop only on even not 10k contract on that day. I think it was 13, which is very small comparing to what still need to be settled within a week, so not enough. So getting 10% down like this in just one day, I think it went down in actually 1 or 2 hours, is a really big concern, and my opinion is the Friday flat is potentially even worse because we had still very little contract that's been trading on that day. We're already sitting near some really key support area, but still the number of open interest is still very high on the front month's October contract. So very much concerning, I think, and at this point I think it's a no-go absolute for buying the October contract, but even going long on natural gas at the moment, I wouldn't do it except for a really short trade for 1, 2, 3 hours with the tight stop loss, but definitely not building any long position. Extremely risky. Of course, we're talking here about the major Contango. So on Friday we closed at 27. That's massive number. We went actually up to 30, I think, before the price action did actually saw some move to the upside for the October contract, but November is still sitting at $2.6. There is just nothing that can justify such a high price at the moment. The weather is not going to make the front month contract shooting. The spot price is unlikely to move up sharply. There's no reason for this. Tropical storms out, the storage extremely high. So to me, it means only one thing, is that we're having a major storage issue, and I think it's quite clear with the storage capacity as we're reaching now 84% average, but we're having some area in the US that actually very near 90% peak. That's very big concern. In the past, I believe maybe 10 years ago, if I remember right, we got some crash where the front month contract went negative, similar to WTI back in May this year. I believe that risk now is real, and we need to be prepared to it, because if we start to see some panic about the storage and so many contracts still open as we are approaching, say, end of next week or early the week after, we could see some panic selling on the October contract, trying to unload it as fast as possible. That will actually make the price crashing entirely. So very big risk on this, and of course we need to think from a trading point of view how we can benefit from here, and I will give some ideas later on. So as I said, the October open interest is still 74k as of Friday, so it'll be really interesting to see how we move early next week. If it starts unloading a bit more, I believe the selling pressure will be very big on next week on the front months, but it will start potentially to unwind to the other future contracts. November and December might actually get under pressure as well. Of course, from a fundamentals point of view, I'm still sitting on the same line. Basically, the production is still moving up slightly. Oil rigs are back in, and even if the natural gas number of rigs are actually not increasing much, we can see that the byproduct to oil is actually moving up because of the number of oil rigs in operation back, and the demand, of course, is still flat. There's still some concern around the economy due to the COVID-19 that will not end in the coming weeks, that's for sure. The only hope, I think, is the LNG export market, but which is meant to actually increase in September or October. I have some doubt about this because of the storage we're having in the other part of the world. Did they actually stack up at low price? Will they continue to buy? Potentially, if we are approaching 2, going under 2, but I wouldn't expect that to save anything, at least not in the short term. So very negative in my opinion, and I believe we should trade this on the short side and not attempt any buying here. So where could we see entry point? So last week we had a really neat entry point with that rising wedge here. So that break we got on 237 was the start of that move, so I did open short position here. I did actually load full position straight from here as the signal was really nice and the trend line was sitting not too far away, so stop loss could be set higher than 2.4 and could that move entirely to the bottom. I actually sold a bit higher at 2.03, but it wasn't extremely important because in that kind of volatility, the ETF, I played 3 times leverage ETF on this. They are not actually able to cope or to follow the actual volatility, so you don't actually get the full leverage anyway. So a few percentages at the bottom is probably not that important. Then of course we got that rebound. We can see that's on the 4 hours. We got some flat RSI here, but overall it is still pushing strong. We having the momentum that moved down. There's absolutely no sign of divergence that could actually point to some bounce, significant bounce. So I believe we are going potentially to test the 2.12 level. That's also the 4 hours 20 MA. That could be one potential short entry. I don't believe we are going to visit the 2.28. I don't see how that could be really possible with the selling pressure we're gonna get, but still let's be careful here and wait for the right signal next week and not trying to anticipate that kind of move. We're talking about, in terms of the Fibonacci, 0.5 is 2.16. I believe 38 is the right level, 2.11, 2.12. So I'll be looking at loading short position here, and I'll be using ETF 3NGS. That's the one in London, because it's been reproducing quite nicely. The leverage didn't get to 3, but at least we got more than I think was need to leverage 2 when the actual cold is actually only giving 0.5. I believe it's very bad leverage or performance for that ETF. Now, what could happen next? Should we actually get the right entry here with that short? We're going to look at the first level at 1.9, but that would be in the best case scenario. Let's say the Contango is reducing, they manage to close contracts, the open interest reducing nicely, Contango getting back into 10% without the price crashing down, then 1.9 could be a safe exit point. So we're talking about here roughly 10% profit, but still, should we break that level, I think we're gonna see something quite dramatic to the downside, because there's just basically not much underneath. That trend line is very important, and of course we're having that big level underneath that is sitting at 1.5. Should we break that level, should we break that trend line, I believe we'll quickly get to 1.5, and then we'll see what the reaction of the market will be. But potentially we could see something very dramatic happening on this market, and the way I would trade it, should this crash, I don't believe there's a reason not to buy into the crash, but we'll need to be extremely careful, not trading with any leverage, as if you're trading, let's say, with a 3 times leverage ETF long, trying to catch that falling knife, and you actually take another 30% drawdown on your position, basically your position is gone. So the idea here would be to trade this with no leverage. Potentially I think UNG could be one candidate for this, and you would actually start loading as you see divergence happening on the very low time frame. Don't have an actual example, but let's say for an example of a really big move to the downside, I think that one was on the 4 hours. It will happen, of course, much faster. So of course you need to drop potentially to the 1 hour. Sorry, I should have prepared that a bit better. I don't think I can get back that far. Yeah, that's cool. Yeah, something like this. Should we see some drop like this happening, and you'll be looking at some divergence or bottom like this, where basically the momentum is actually not able to move higher, then start loading a long position with no leverage, because if it's crashing, similar to the WTI May contract this year, it can actually go negative for the front month's contract. So the ETF will not go negative because it will have exposure to future contracts, so it should be safe enough not to see it going to zero, but it will crash significantly. I think we're talking 0.5 or $1 is probably not to be excluded in terms of the actual contract value for the continuous chart. So yeah, that's about it. That will be a very interesting week. Don't get caught on the wrong side. Don't try to catch the long, because it is cheap. The risk is just too big, not worth it. There will be plenty of occasion to enter long for winter trade in the coming weeks. There's no need to rush, but on the short side there should be some very rewarding trade to make, and I'll be just looking up for this. Thanks for watching, and I speak to you soon. Cheers, bye.